Hello guys, Tim here. Welcome to this video. So today we're gonna go over a couple of the rounders that happened in the last couple of days. It's been a little bit more active compared to the last 2 months. Let's see what we can do to make trades profitable. And before I start this video, make sure to click the like button and subscribe. Let's get into it. So the first one we have is ATGL. This is considered as a multi-day runners that is currently running on IPO. And there's a couple of things that you want to take into considerations when you are trading IPOs. First one is market cap and float. Typically, or 80% of the time, they're not very accurate. So everything is based on the volume and the chart actions that IPO can behave very similar to a micro float, even though the float is over, let's say 10 million to 20 million. When you are trading IPOs, make sure there is enough liquidity. Now, what do I mean by enough liquidity? Is on the current intraday, the stock at least needs to trade about 4 million shares or more intraday level. So let's take a look at the highest volume on ATGL, 2.7 million. So it did not exceed 4 million, which is not considered shortable. The liquidity is not there. And we have experienced HKD in the last 2 years. There is a big issue with liquidity problems, and if you are shorting with a large size, it's impossible to get out without taking a huge loss. First one is you are basically pushing the stock price. Second, the spread is way too far and you are not going to get a very good executions on it. So ATGL is looking very similar to HKD, and I would stay away as far as possible. And we want to see at very least trading around 10 million shares a day, very similar. That's going to be very similar compared to VFS on the rounds in August. So you can see the volume is actually trading 15 million shares a day, 12 million shares a day, and it's trading around $90 a share. The total amount of dollar was traded on the peak of the candle is around 1 billion. So we want to see at least ticker like ATGL trading 20 million shares around $50-ish, maybe 10 million shares around $100. We will see how far this one can go. This is not the first red day. There's no consolidations. The volume was way too small. So whenever we want to judge a consolidations, a ticker needs to trade at least 1 million shares or 2 million shares within 2 to 3 hours. Not consolidating for the entire day, which is 7 to 8 hours without only trading around 800k shares. That's the recap for ATGL. Then let's take a look at OPTX. This is also, I believe, is IPO as well, first green day. Typically when we're running into IPOs, we do not want to trade first green day. We also want to avoid second green day as well. We want to see either first red day, that's after a huge amount of volume, which is intraday over 4 million, or we want to see a massive dollar block, which look like VFS. And OPTX has not performed either of the two actions, so it is not considered to be tradable. And we will have to wait for in the next, I would say 3 to 4 days to see how it's really going to trade, and we can judge the chart from there. Then let's take a look at the last one, which will be SGD. This ticker is running up from Thursday from 0.5 to all the way to 10, so it's up about 2,000% in total on the second green day. So first of all, when we're looking at the IPO second green day, either we want to see a 50% fade in the pre-market actions, then we want to short in the push. But you can see that the entire gaining percentages is around 2 to 10. So if you want to see a 50% of the entire range, from 2 to 10, which will be at 5. So ticker needs to fade all the way back to 5, then spike up to 10. It will be shortable, but this one kind of consolidated around 8 to 9, so it didn't really consolidate or didn't really pull back 50%. So what we're looking at is we want to see long consolidations or massive weaknesses with a huge reversal. Typically, when we're looking at a straight fade like SGD today, we're not going to see it very often because first of all, the volume was at 10 million shares before the market opened. The entire volume estimate, the volume is around 100 million. So that makes the stock very crowded and it's very easy for stock to reverse and trade a lot more volumes and cause a massive short squeezes. So as a short sellers, you want to avoid a low float with very crowded volume in the pre-market. So with how much volume that traded on the current day, since I did not place a trade on SGD, even though I bought shares, did form a consolidations around 6. So let's see on the following day if the stock gaps up all the way to 6 or gaps up to 8. it will be a very shortable ticker using the previous day resistance. I think it traded around 20 to 30 million shares, and it will be a decent opportunities if it pushes up to 6. But if it doesn't, then it will be a waste opportunities. Now, personally, I believe that if you place a short around 8 or 7 after market open and you made a profit on for the entire day fade, which I do think it is a very low chance that ticker can fade in the second green day with crowded volume. It will not fade 50% like this. So I will think it's a money that's made by luck, and typically that money was made by luck. You will always tend to lose it in the next trade. That'll be the trade solutions in the upcoming days for SGD. That'll be the entire recap for this week. And if you have any questions, please leave a comment below. And other than that, I will see you guys next week.